Good afternoon, everybody. Today is Friday, the 17th day of December 2010, and I believe we're live here. So let's go ahead and take a look at this market and see the S&P 500 closed up 13 cents. Now the S&P 500, the spider paid a dividend last night, so it traded ex-dividend today. So that's why we have this what appears to be a gap lower, because it's kind of funny thing that occurs once a quarter. But the market still is holding up. It was, like I said, it's up 13 cents on the day, and it's constructive here when we look at the daily time frame. We still have I think next week this level will continue to be important at about 123, and there's a lot of good action in the individual names, which is where the real money is made right now. But it's tough to look at this SPY chart without that gap, or because of that gap in it, rather. We take a look at the trend line that we saw on Wednesday. Again, that doesn't always mean the market will decline, but we do still have just kind of some indecision here and sideways activity. 123.80 is going to be the level that we want to see this market hold above early next week. If it breaks below that, then we've got this next level at about 123.30. So it seems like it should be well supported. We are above rising moving averages on all these time frames. So there's really, it continues to be just a market that you have to call innocent until proven guilty. There's really not a lot of reason for fear, I guess, other than fear itself that something's going to go wrong individually in your stock, or maybe your earnings are going to come out on a stock and hurt you. But you take a look at the NASDAQ; it's holding up real well here this week. We saw a pretty tight range with the resistance up at about 54.75, and looking to the daily time frame, we can kind of get a better feel for kind of the neutrality of the market here, not just this week, but from late last week as well. Really, this up to 54.80ish, down to about 54 bucks, even 53.95. So 53.95 will be the level that should make sense as far as what we want to see hold as support initially. We've got a rising 10, 20, and 50-day moving average. We go down to that 30-minute time frame, and we're kind of crossing back and forth above and below that 5-day moving average. But again, the pattern of higher highs and higher lows on the bigger time frame is still in existence, and that's really where you want to put when there's indecision in the market on a shorter term time frame, you look at the next bigger time frame to say the trends of the bigger time frame are really what hold more weight. And again, it's very constructive action. The Russell 2000 was up here today at a closing high for the day, the week, the month, and the year. So on the weekly time frame, we continue to see that the Russell 2000 is really the stronger market. It made it past this prior resistance level, and now looking like, as we've said before, that it's on its way towards the $80 level in the Russell 2000. There's we've got an extended market, but this week it really held on to those gains through time. It was more of a time correction as it waited for that rising 10-day moving average to come up and meet it, rather than sell off down to it. And we had, of course, that one break below the 5-day moving average, but we obviously recovered. We're back up towards the high end, and next week, if we get above these highs of 78.20, then we would probably be looking for a move up towards that $80 level. And of course, the NASDAQ, the bigger level there, if we break this this 54.60ish area, is found on the weekly time frame, up from those 2007 highs. We've had our eyes on those for that level for a couple months now, actually. But the semiconductors, which have been the strong group, continue to show that leadership as they're holding above the rising 20-day moving average and that trend line. We've seen that this group has corrected a little bit, and the pattern that we had seen and what we were talking about the other day of lower highs and lower lows has now been broken, and we have first this higher low and then a higher high here and another higher high. So when we look at the semiconductors, what we'd like to see is that 5-day moving average to flatten out, and then we take out 3280, and above 3280 I think it probably heads back up for the highs for the year. And when we look at the weekly time frame to get some reference there, we'll just draw a horizontal line, and we'd still be looking for this movement up towards about $34 a share. So as we know, this recent little profit taking occurred from these lows that were support back in mid 2007, and then the next potential level of resistance, of course, is up at about $34 a share. So there's nothing to be worried about with the semiconductors. I think that if they break down below this pullback low, then maybe we're going to see a bigger break, but it just doesn't occur to be, it doesn't appear to be likely at this time. Just like the financials are holding on to that rising 10-day moving average. The 10-day moving average is above the 20, the 20 is above the 50. These pullbacks don't always do what they're supposed to do, and we discussed that back here in big detail last month, what we were looking for from the financials was for them to hold that 5-day or 10-day moving average and then make this pattern of higher highs and higher lows. Well, of course, what we saw instead was a breakdown, and then it recovered. So what we want to see now is that this market can hold some support, and as it rallies back up, that's when would be the proper time to get some long exposure. And right now, what we see on the 10-minute time frame is we have this pattern of lower highs and lower lows. Perhaps we're seeing that shift towards the higher lows in here, and it probably needs to clear 1565 to 1570 for the buyers to retake that control. Ideally, maybe a move up towards 1560, a slight pullback, and then a push above 1570 early next week would get this thing back above the 5-day moving average. We'd have that 5-day moving average advancing, and then we could make look for the next thrust higher in the financials, which when we look at the weekly time frame and try to determine what that next objective would be, here's basically where we are. I think that looking at these lows from back earlier this year, so we'll take a look at the daily time frame to get a better handle on that, but that'd basically be this level right here, and that's the post flash crash high. As we know, this is this was the flash crash here. Here was the recovery high, and that would become, I think, the next objective to the upside. And I don't think it's unreasonable to think it could happen before the end of the year, that we would at least test those if this financial market can hold up and this is in fact a higher low. If we break below these lows and hold below it for more than a half hour or so, I think the chances are we will not get a test of the flash crash recovery high near 1615. But given the strength of the overall market, and today we had it wasn't overwhelming like we've seen recently, but we still had positive breadth here. 1660 advancers, 1344 decliners, and there's good movement in the individual names. One of the stocks that we've been watching is the CELL, and look at this 5-minute time frame. Today it just set $8.99 to $9, and finally got going here a little bit at the end of the day as that stubborn seller at the $9 level left. This is 906. This is a type of stock that I think you look at this one. We've got a rising 10, 20, 50-day moving average. We look at that weekly time frame. It's got a very nice looking chart here. I have a small position in it now. I'll probably I'd like to add to it next week if it can behave well. But I think it should be heading up towards about $10.50 a share. In particular, if it can get past that 2009 high and the what was this high? The intraday high here from what day was this? Looks like November 9th on CELL. Some of the little stocks this time of year do well. Also, we've got Cell, but I'm sorry, Elan. Some of the other. I don't know if Elan is a generic manufacturer of drugs, but this week we spoke about Mylan Labs, which had a real nice week. Forest Labs as well, which pulled back in here today. But Forest, I would think, let me just type this in on this other thing so I can get it to populate all time frames. Forest Labs, probably pulled back a little bit too deep in there. So if you got involved in Forest Labs, I don't know if I mentioned it on Wednesday, but if you got involved in it, I would be concerned that it's pulled back a little bit deeper. And then, of course, the name of the game is always, find the low risk ideas and then manage risk. Mylan Labs continues to make these higher highs and higher lows. You want to protect yourself with a stop somewhere down maybe near 21 and a quarter or so. But back to the broader market again. USO, we did talk about that, and the range continues to be just pretty tight here in this USO for the last 2 weeks, 37.5 basically up to about 38 and a quarter. And if it can break, I think these highs at about 38, looks like 38.40, 38.35 to 38.40, then USO, which represents oil, would be headed up towards about the 39 area, I would think. Gold, we had seen, it's correcting in here, at least sideways through time right now. It's holding on to that 50-day moving average. In the direction of the 50-day moving average is higher. A lot of people, will look to sell it short below the 50-day moving average, and then they end up getting trapped. It closes maybe a day or two below it, then pops back up. So gold, I still think is probably more neutral than anything right now, and I guess you could say the same probably for silver as well. That silver's holding that rising 20-day moving average. This is probably what I'd view as an important level for silver next week at 27.33. But still like I said, some good action overall in the market. We had this one stock Jefferies breaking out today, JEF, which is a good looking bullish chart. If you look at the I had posted on Twitter some a link to the Alpha Scanner blog earlier today, and the Alpha Scanner blog is the Alpha Scanner is as the name would imply, a scanner, and this is the blog there that has right now what we're looking at is just the homepage of the blog, but down here we can see there's these are the types of stocks to focus on, in my opinion, the ones that are in uptrends with big short positions. So that's a great list, along with a Stock Twits 50 list to look at over the weekend and try and cull for some trading ideas, and try to determine which ideas out there make the most sense for you personally. There's a lot of ways to go about that, and then when you find those ideas, how do you trade them? I can give general technical analysis about them, and a lot of times what I'll do is I'll day trade a stock that's even a good swing trade setup, simply because I don't like to give back my profits as they get going. Yesterday I was involved in New York Times, and it just didn't seem to have the follow through. So I got out of it. It popped up, pushed back in, popped up, pushed back in, and this was really the textbook buy area where we got that higher low and then a higher high here above the 5-day moving average. Well, I got shaken out, and that's my personality. Today it had a nice day, and New York Times still looks like it could head towards 10.5. Sometimes when you look at stocks, and here's something that's kind of not really a curse of mine, but I guess it's kind of like if you were, if you know anyone who's had any problems with drugs or alcohol, and let's say they've done heroin, and then they know that they've done heroin, they've done the most extreme drug, and then they can't, then they're clean and sober for 5 years, and people say, well, you just have a beer. No, I can't do it. I just can't have a beer. It triggers this, addiction response in me, and and then I go downhill, and the slide into addiction begins fresh. Well, that's kind of the way I feel sometimes looking at 1-minute charts. That looking at these 1-minute charts is kind of like the heroin or the crack of the market, and that you get focused on these little blips, and you fail to kind of see or recognize or appreciate that larger picture, and the fact that it's nice to drink a beer. You don't need to go crazy and go shoot heroin in your veins. But anyways, probably not a good analogy. But anyways, let's take a look here. I'm done with what I wanted to talk about here. It's a Friday afternoon, so we'll take a look at some requests from you guys, and then go from there. So let me see what we have here first, which would be from, Fibline gave me another retweet. Thank you, Jeff, or let's see. Hope you're right. When are you on? I'm on now. Sell's finally making a move. It looks good. Bought a little to feel better, to keep an eye on it, and that's the way. When I'm looking at a stock like CELL, that's what I do. Is I'm looking at a level that I perceive as important, and it was $8.99 to $9. So I bought some at $9 because I was looking at going, well, this is the type of stock that's just going to go all at once, and if you're not paying attention to it, then it's just going to go without you. I still think it's, like I said, I'm holding some over the weekend, and I'm going to hopefully add to it on Monday as well, but we'll see. Let's see, Bada 44, thank you for the retweet. Finance Trends also, and Trade Pips. Let's see, Day Trading Zoo. If you're taking requests, could you take a look at LLTC above 35? Let's take a look at Linear Tech. So this is a semiconductor equipment manufacturer, and I believe they are, at least. So a lot of people look at this and say, hey, nice cup and handle there, and it broke out 3 weeks ago at the beginning of December, and it's rallied up, waited for the rising 10-day moving. So it corrected through time here. It shows that there's still underlying bids in this stock, and it's a nice, strong stock. It waited for that rising 10-day moving average rather than pulling back in price down to it the way it did right here. So a correction through time is showing that there's still strong bidders, and this will likely be an important level of support next week near about 34.20. If we back it up to the weekly time frame and take a look at where we have we've just broken some important resistance here, and we broke that level as well. So looking at and what that level, the second level, you can see was important late 2008, and it was also important in 2007 as a support area. So we've cleared those two levels, and you have to look at it and say, where was there an important level in the past? And I think that these would be those levels. So let me just show you what I'm looking at. Basically here is I just drew this support from 2007, which became resistance in 2008 at about 35.50-ish. So 35.50-ish looks like the next potential level of resistance. Now, is it really relevant? It occurred back in 2007. Are there really people still holding and wanting to get out at break even? That's probably not the case, that they're trying to get out break even, but it's more that enough people look at these charts and it becomes a self-fulfilling prophecy. I wouldn't not take a trade because of this potential level, though. I would think it's more likely to go on and test the 37.5 if you have the patience to hold it longer term. But we can see here in this 10-minute time frame that we all week, last week and a half, 34.20 is an important level as far as support goes, and I don't think you need to wait for it to clear above $35 a share, which was the question here. I think that day trading is it's basically a buy in this area. This would have been really the place where I would have, if you asked me prior to today, I would have said above these highs would have been the place. And it broke above those highs. It pulled back. That resistance was short-term support, and it got a little push on volume here at the end of the day. So I think that this looks good, right at these levels. Worst case stop for a swing trader down near 34.20. Maybe if you're a little bit less patient, 34.40. And if you're, if you do have the needle in your arm, then you would take one of these higher lows and try to manage risk that way. But Linear Tech looks like 35.5. Maybe you get a little bit of resistance, but onward to 37. Just manage that risk and let the market hopefully continue to follow the path of least resistance, which is higher here. Trade Pips, thank you also for the. I already thanked you. Let's take a look. Yes, we've got Linear Tech, and let's see, GTY. It's a nice dividend coming up. What do you think? I don't do dividend plays. If you're trying to do a dividend capture and that sort of thing, I don't do any dividend type plays. So just taking the chart based on the chart itself, it's in a nice uptrend here. Clearly, the stock's been kind of stair-stepping higher, a little shakeout maybe there. You would have hoped that this level would have held a little bit better as support rather, but it was caught by the rising 20-day moving average. That's where the buyers stepped in and took back control. It's had a big run, for a REIT, 21 to 30, 50% here since May. But that obviously doesn't mean it can't continue to move higher. We're looking at the longer-term chart in here. It's for a REIT, I wouldn't expect this type of uninterrupted move. So I would think it's unless there's you've got information about the dividend, something about their fundamentals and that. Just the fact that it's a REIT, I probably wouldn't personally trade it, but that doesn't mean it's not a good trade. One thing I would be concerned about, though, is the average daily volume is only 151,000 shares. So it's highly, what I consider to be highly illiquid. It did, 250,000 shares today. And I could tell by the intraday time frame that it does trade thinly, especially when you look at the majority. I mean, so today 250,000 shares. It looks like 150 of those were done in 2 block transactions. So very little liquidity, and you'll see it trades in dots here basically. But I would say that the important level for GLT right now, it would be this recent pullback low at about 29.60. If it breaks that, then I would think that you would probably want to move to the sidelines. But looks good otherwise. But thin volume, I definitely wouldn't get involved, especially because it's a REIT and the thin volume. TIBX does trade 1.9 million shares, and let's see, who am I looking at for? This is Okra Peas. So Okra Peas, it's in a fantastic uptrend. I mean, you just can't argue with an uptrend like this. It's higher highs and higher lows. It pulls back, it refreshes. It caught the 20-day moving average this last time. Beautiful uptrend on the weekly, where all these pullbacks have been contained by the rising 10-week or 50-day moving average. Looking at the weekly chart, I would say though that since that last bounce, it's not so extended, but it's had 4 weeks of upward movement right now, and that's here we had maybe 6 weeks. 4 weeks right here. Now we're into the 4th week. It's getting extended. Monthly chart. Let's see what the heck's going on here. So we'd broken this level, and where's the resistance? Is it up near 32? Maybe it is. I don't know. But it on the weekly chart, it looks like it's getting reason to think, well, it's been up 4 weeks in a row. But then when you drill down to that daily time frame, again, we had a nice correction to that rising 20-day moving average. So once again, we're seeing a lot of stocks are being caught at that rising 20-day moving average. Here we broke some resistance and got back above that 5-day moving average. So I would think a stop would probably go near 2060 to 2085, but it looks like it's heading back up. And again, you can't fight this kind of momentum. It's absolutely foolish. I think that it's a good one. I prefer stocks like sell. This is just my preference. I just kind of show you, what I'm looking for is, these stocks that have the nice weekly move, consolidations. Who knows? Maybe sell's going to go to 14. I probably won't hold it there. I've traded Tibbix numerous times, back in here and here, but I just don't have it in my blood to hold on to these things. Can I take a look at ZLCS? Let's take a look at ZLCS. Where do I think it can go for ARONCE, ARONCE? Oh, ugly weekly chart. Hate it so far. Daily chart, it's just kind of neutral in here. I don't see anything compelling about this stock. It, gaps lower, it recovered. Maybe it can get back up to 160. I can see the strength that it had in here today, but it's just basically the way I'm looking at it is it's a broken stock. I'm gonna come up with a list actually of stocks that are good January effect trading stocks, and not that this would be one, but a lot of times this time of year you do get good movement in the lower price stocks, and there's some good setups in that group. Like I said, there was the AEZS. We were in this one yesterday. Continued to move nicely today. So you look at AEZS compared to that, and it's got a good looking weekly chart. You look at a stock like PIP. Where is it on my symbol list? Let me just type it back in. Pipster, though, PIP, this weekly chart, if you get up through this level, the daily chart, it actually, you're looking at PIP, it looks very similar to CHTP, which, prior to this just, movement of the last 2 days. You can see how those moving averages got back in alignment, 10 above the 20, 20 above the 50, etc. But going back to Pipster here, PIP, we have that nice looking weekly chart. We've got this stock has been holding this rising 20-day moving average, and it trades what did it trade today? It traded 2 million shares today, which is about average. So it's a liquid stock. It's got a good chart. It doesn't look like it has a lot of resistance. You get it up through about 4 and a dime or so. This is the type of stock that can quickly shoot up towards $5 a share. So those are the that's to me would be a more favorable type of inexpensive stock, or a stock like Taser, which I own a little bit of. It's holding above its rising 200-day moving average. It's broken some resistance. That resistance has held support. It traded some nice volume in here today. Traded 1.1 million shares versus an average of 580. So you want liquidity. You want a longer-term base, not all that choppiness that I'm seeing in ZLCS. So it's not horrible, but I wouldn't. I probably would just skip over it if I saw it. Looking at it myself doesn't mean obviously that you can't make money with it, but you did ask me what I thought of it. So let's see. Fibline saying Dr. Phil joke, haha. Yeah, with the let's see. How about MS for who's this? Positive Psyche. So let's take a look at Morgan Stanley. Morgan Stanley has potential, I think, really above 28, but right now Morgan Stanley, it's it looks kind of like it did here. It looks like it did here. It looks like it, so it looks decent. I would say that, if you're looking at a stock that's in a range right now, it's been in this range 24 to 28 for the last 6 months basically. So it's a range bound stock. Now the financials are have been doing better. You've got Citigroup looking okay. Bank of America looking kind of like, well, if I can get back above this level, maybe something's going to happen. But Morgan Stanley, I would say, looks better than Bank of America, though. But it's just kind of neutral in here. If we take a look at the 30-minute time frame, it came down, rallied up to the 5-day moving average today. So maybe next week it begins to recover from this pullback in here, and probably needs to get it back above at least today's high, maybe near 20. Let's take a look at a 10-minute time frame. Probably needs to break back above this, above 2675. Probably above this little peak right here, 2675 to 2680. So if it can rebuild and get back above 2675, I think a swing trader could put a stop down here about $1 away, and then you've got a shot at a test of that 28, the resistance at 28. If it can get up through 28, though, kind of similar to the financials, breaking out here, then financials get up to 1615. Stock like Morgan Stanley is going to be the type of stock that helps it get to that level, and then perhaps Morgan Stanley could get up to its post flash crash high right here at about 29 and a half or so. Looking at a weekly chart, let's take a look here. Yeah, that's just a big level right there. So it's just in a big range. If we can get up through there, then I think you're going to see 29 and a half to $30 a share in Morgan Stanley. How about a look at LOCM? And when you guys put in more than one symbol, I'm just going to take the first one because we get too many people here, asking, and I'm about to wrap it up here real shortly. Anyway, but let's see, Trade Quando. How about Locum? Let's see. Locum looks like it's got a big potential for resistance. Where does it come from? where does it have the potential to go before it's likely to encounter resistance? Well, it's had a real nice break and then push higher right up to this prior support. So the stock just came from 370. Let's just call it $4 a share. It's just up 50% in the last 3 weeks. And where does it have the potential to go before it's likely to encounter resistance? Doesn't mean it will encounter resistance there, but we're right at that level. It is holding the 200-day moving average, but the further I back this up, you can see that this level here on locum is an important level. I would say you could keep an eye on it, but I wouldn't expect it to get up through beyond this level here. Now the volume is increasing nicely, and the volume comes in the way you want it to. That is, it's rallying on big volume, and as it pulls back and corrects through time, the volume has become lighter in comparison. On the 10-minute time frame, we've got a pretty clear level here at about 642, 645 maybe. We have these higher lows, so I think that as far as that goes, we've got these higher lows above a rising 5-day moving average. We're above all the moving averages. We're at a potential resistance level, but potential resistance doesn't mean it will fail there. If it could get up through that, then I think a shot for 7 looks likely. So a way to play this would say one of these higher lows is going to be where you would want to put your stop if you get a higher high above about 643. So I think you could probably buy it above that 643-ish area and then say, where do you want to set your stop? So if you can look at this, from the bigger picture, maybe it doesn't look as great. You drill down to it and you say, well, I could make a low risk play where I could only risk maybe 25 cents to get involved in. I think they will be able to push it, if that's your opinion, that they can push it up through this prior support, which is becoming resistance right now. Then I think the next move is up towards 7. So would you risk 55 cents or 25 cents to make 55 cents would kind of be the way you want to look at it, I think, from a risk-reward perspective. Let's see, Winthrop will say, peeps in my office will never think the same way of the markets after your heroin and crack analogies. Well, cool. Maybe that wasn't the best analogy. Day Trading Zoo, you're welcome. Last one is for Kev946. Let's take a look at AMD. So AMD, I seem to recall it was looking good the other day. We've got this important level right here. So this is clearly a level that's been important to this stock. And you might even want to say, if you're into patterns and that, here's a cup and handle. Or I'm not a cup and handle. If you took this stuff off, you could call it a cup and handle. But this is your left shoulder, your head, and well, anyways, I'm not going to write it in. But then your right shoulder here. So we've got this stock that seems to have kind of rounded out, made this bottoming process on the daily chart. We have now a rising 10, 20, and 50-day moving average. Let's back it up a time frame to the weekly to see what the kind of what kind of potential we have here. So we broke that downtrend line. We have this little inverted head and shoulders pattern, and we're hammering away at this resistance, and this resistance you can see was important prior support. So I think if we can push up through here, then you've got the next likely upside objective near about, let's just change the scaling so we can see it a little bit more clearly, near about the 9.5 area. So it's working on pushing up through there. Now this is actually good to see that it kind of broke past that level. And then you probably had the programs come in and squash that breakout, but they weren't able to completely crush it. So we've got, and we even made a little shakeout low here today. So that which doesn't kill it, I think, is making it stronger. It's closing above this rising 10-day moving average. Drill down to a shorter term time frame. This is going to be an important shakeout low. So if you're positioning long in AMD, I think over the next week or so, this is 785 is probably where your stop will want to go. Now, does it make sense to purchase right here, right now? I would think a short-term time frame, maybe you get a pull back to 8 and then a push up through that 5-day moving average in these levels. AMD looks like it's a good candidate to push beyond this 8 and a quarter level. I think it's tested it enough. It had that false breakout. The next one will probably push this stock, I would think, pretty quickly up towards 9.25. It's really been a laggard with a real strong semiconductor group, and the junk rises at the end of a cycle, or not. It's not necessarily. I shouldn't say that because there's nothing indicating it's late in the cycle for these semiconductors. But after they've picked over the leaders, they start going after those little ones, and the little junk that kind of got left behind starts to catch up a little bit. And I think you could see AMD move from here. So that is going to wrap it up, everybody. Thanks for tuning in here on Stock Twits TV, and check out Alpha Trends, my blog and subscription as well. Have a great weekend, and I will talk to you if you're taking the week off next week, which a lot of people are. I will be here on, well, you know what, I'm not even sure. We'll play that by ear, but anyways, have a great weekend. Thanks.